Hello and welcome to the Stock Planner channel. Today we're going to talk about two stocks that are undervalued and growing. And I think will do well if we have inflation and our supplies issues still persist. The two stocks I'm talking about are Walgreens and Kroger, two consumer defensive stocks. But before we do, I want to remind you that we're an education channel and we like to share our ideas. We're primarily swing traders, but we're not really making any kind of recommendations. I'm showing you what my trades are, what I like to see, my trade lists, with the hopes that it'll help you develop your own trade list, because you really can't follow somebody else's stuff. You have to develop your own strategy, your own trade list, your own watch list, and do it yourself. If you're relying on some kind of black box or somebody tell you to buy this and sell this, you're really not learning anything, and you're setting yourself up for loss. So let's get started. Let's take a look at these two stocks, see what you think. Make sure you leave your comments because I love to engage. Okay. Well, Black Friday looked like Red Friday. The Dow lost over 900 points, and all three indices lost more than 2%. Lots of factors involved, but the primary reason was the scare for the new strain of COVID virus. But I think inflation and the supply chain issues have a lot to do with it as well. Checking out the groups, again, everything was red. Healthcare and consumer defense seemed to do the least poor. Looking at the 1 week, there's consumer defense again. And consumer defensive are things like food, packaged food, tobacco products. Yeah, what is consumer defensive? Companies that manufacture food, beverage, household, and personal products, packaging, tobacco. And it makes sense because, again, we're talking about a food shortage. The price of food is going up in all the stores. And these are things that people need. We would argue about tobacco, and I didn't know this. It also includes education and training services. Walmart, Procter & Gamble, Philip Morris. So that seems to be the place to be. You can easily scan for consumer defensive stocks on FinViz, but I'm using Simply Wall Street, and I'm looking for established companies that are undervalued in the consumer defensive realm. I didn't include education, and that are growing, and come up with these 8 companies. And there's Walmart, and there's Altria cigarettes, Constellation Beverages, Walgreens Boots was one of the ones I want to look at. And the reason why I like Simply Wall Street is it gives me a little perspective using the snowflake. And this one has a green, you're looking for green snowflakes. And this one, great, pays a dividend, has great path growth, the health of the company is good. And I believe the future is quite nicely, but you want it more filled in for the future. And there's Coca-Cola, but that's what Warren Buffett does. But I want to do Kroger and Walgreens. You can check these other ones out yourself. I definitely like Cisco. You see trucks all over the place with that sign. And that would make sense to go. It might be worth looking at that on your own, because it's transportation too. We're going to look at Kroger and Walgreens. Simply Wall Street offers a lot of graphics. It's not free. It does let you do 5 of these a month free, but the paid version is quite cheap. And it says, and we all know what Walgreens is, it's pharmacy-led retail and beauty. It says it's trading at 75% below its fair market value. Earnings are forecast to grow quite significantly. Not quite what it grew over the past year, so it's slowed down there. We'll look at that. And pays a very high dividend of 4.1. Nice. Competitors are Rite Aid, Progressive Care, Amazon. And I've been doing a little reading about Amazon, and I'm not sure about that. Current price is $45. Should grow over the next year for $185. I don't think Kova hurts either. The future growth, it seems a little flat there. But the company, as far as earnings, will beat the market. The revenue growth, though, it will slow up, according to this analysis. Yeah, I'm not an analyst, so I have to trust what I read sometimes. And that looks decent there. Earnings per share growth forecast. Their past history, and that's phenomenal. Well, that probably was Kova. Some selling going on inside, and no buying. We want to see buying. And as I said, it pays a really decent dividend. Walgreens trading at stock symbol WBA. And this is the daily time frame. I'm going to switch this to the weekly. This is Trading View. It's a charting package and that allows you to do watch lists. Everybody should have a watch list. And allows you to have some indicators. I use the MACD, the stochastic RSI, and the RSI. But first of all, I'd like to draw a Fibonacci on the last known print of the zigzag. Now, the zigzag is an indicator as well. It's a visual indicator. You see how perfect it is? It always picks the tops and bottoms. Always. That's because it uses data, forward data, and future data that we don't have. We're sitting here. We don't know what the future's like. And what the zigzag is doing is waiting till it knows what the heck's going to happen. It looks like things are just flipping around here. So it's not going to say or do a print. It does some minor, but it's not going to do a major. We don't have that privilege. We have to use other indicators. This is the MACD indicator. It's saying it's going to go down a bit yet. So the stochastic RSI and the RSI. And it looked like it went down today. But I think for the next year that Walgreens is going to go up. Again, this is the weekly. Let's switch back to the daily now after you draw the fibs. And you ask yourselves, is it going down here first or is it coming up here first? Now the RSI is below in its oversold position, and the next thing it might happen is that eventually it'll come around and swing up. Likewise with stochastic, oversold, maybe swinging around. And the MACD is below the zero line, which we'd like to take up and look for a long trade. So yes, it might come back down to this line here and bounce, come back. It seems that's a good level of support, and I think it's going to end up here somewhere. And be honest with you, there is around 51, and you remember this 51 because this is something that I want to talk about again. 51. Anyway, we're swing traders. We try to get these swings. We use our indicators to do it. Our indicators on the daily time frame look like it's oversold. It may be a good time to start looking for a long. We had a down day today, but now I'm looking for this for 1 year out, and I think it'll end up from what it is today. That doesn't mean I'm going to wait to take my money 1 year. It means that I'm going to trade this thing throughout the year. Anyway, you could buy this stock right now. It's a relatively cheap stock, around $45. If you have a $10,000 account, which a lot of times I focus my energy on the $10,000 account, $5,000 bank and $5,000 margin, you'd want to trade about $1,000 at a time, and that'll give you about, I guess, around 20 shares. But I'm going to use margin. Remember that 51. We're going to go long. So I use a tool called Option Strat. It's a free tool. It's a simulator. And you can do all kinds of scenarios and strategies here. But this time I want to do a diagonal call spread, which is like a poor man's covered call. In other words, I want it to go up. And what you do here is you have a back month. In the back month, I want to go a year out, January 23rd, and I'm going to buy a call. It's going to cost me $858, right? Okay, right there. But $858. It's going to cost me out of my pocket to do this trade. And then over the next year, I'm going to sell a call every month for $32 to $50. Right there. I'm going to try to get the ask. I'm going to buy a call for $850, and I'm going to sell a call every month, and we'll say $32, which is about a 3.8% profit. And you can play around with this to try to get your 5%. I would like to try to get 5%, but this is what I'm going to do, 3.8. And that means that as long as it stays above $45, I'm going to win. But I'm going to sell this at 51. 51, remember that 51. And then if the stock gets up to 51, you can close this all out, or you can close this out, and you'll have a profit. If it gets to 51 the very first month, and you want to take then you would have a profit of, let's see, 51, anywhere along here. Anywhere along, that's decent if it gets up that high. And if it doesn't get up that high, you can get to keep whatever you got here, which is $37. And you can do it again and again, 37 between 37 and 50. And do it again 14 times. 12 plus January, December. It's 14 times. And as long as it stays above or reaches 51, but as long as it stays above 45, this long call will be profitable as well. You wanted to get to 51. If it gets to 51, this will pay for itself, and you'll get to keep all this stuff, these 14 different profits. So it's a win-win, but it has to move up. This stock has to move up to 51. Can it do that in a year's time? 14 months? Can it go up to there? I think it can, because we just did the analysis, said it was going to go to 185, according to this. Let's see what TipRanks says about it. And TipRanks is not so optimistic about it. Their analysts, and there's 5 of them, have an average of $55, going up to 68. But that's still better than 51. So we need it to move. And what did they say about the stock? They like the stock as far as they feel it's going to underperform. They're not so hot about it on TipRanks. More optimistic on Simply Wall Street. They use a different valuation technique. So I guess believe what you want to believe. But I think this stock is going up based on the current scenario, based on our shortages, based on the COVA, based on the shortages in food and home products, and based on the fact that today, when it's down market, consumer defensive did quite well. And I like the fact that for a cost of $826, I have a pretty good potential long term to take and make money on the long call, and for 14 times sell a call and collect $37 to $50 each time. Poor man's covered call. What do you think? A lot of trading going on in Walmart today. I guess it's because of Black Friday. But we're looking at Kroger. My wife likes Kroger, food retailer. Upscale, I think it's upscale. And again, it's saying it's trading at 45% below the fair market value price. Earnings are forecast to grow, I don't know if that's, but 11%, and a very small dividend of 2%. This snowflake is not so green. It is not giving a lot of things to the future, and they have some analysis checks. I don't cover all that, but the profit margin is a little bit lower this year. Never heard of Sprouts Farmers. It might be out west. Weiss, definitely heard of that. Trading at 43. They're expecting it to go to 77. Future growth, it's growing. There's the company, there's the market. It's right in there. Underperforming the industry for revenue growth. Past performance, and apparently this year is going to be better than the years past. There's the dividend, small, and some shares bought a few months ago, but a lot of insider selling. I do like undervalued stocks with growing. Let's see what TipRanks has to say. I've traded Kroger several times this year. It's 43, and they're predicting a downside, and they have a hold 14 analysts. That's a lot of coverage. The high is 50, and the average is 41. A ranking of 6, that's not so bad. That's where there's that insider activity again. The technicals and fundamentals look good. It is trading above its 200-day moving average, and next earning date is December 1st. You might want to wait on this one a little bit. There's Kroger. Nice swing. Right now, the zigzag does know what it's doing, and it thinks it's going up. There's your earnings date, and a lot of people don't like to trade around the earnings. And both the stochastic and the RSI are in a near its overbought situation. But this is the thing I like. Today, Kroger had a green candle on a down day. Remember the red day. I don't know if that's telling me something, but you either got to like it or don't like it. And based on what I presented, leave your comments below whether you like Kroger or not. But let's look at a long term over the year, just like we did it before, where for less than $1,000, you could buy the stock, by the way. Again, it's the same price as the stock that we just covered. So let's see what we can do as far as putting together a strategy. Kroger's diagonal spread. Let's go out to January. And that's a month out for this near term. Near term is at 47. And we've got 37 here. And it cost us $800. And what can we sell this for? Selling it for $65, $60 or $65 on an $800 investment. $868. which is about 6% per month. That's sweet. The implied volatility is probably a little higher for this stock right at the moment because of being so near its earnings. Oh, I don't want to adjust this. And our break even, it needs to stay above 42, but we need this thing to go and eventually hit around 46, 47. Let's look at the chart. Is it getting up to here, 45, 46? Is it going to get up to there in the next 14 months? Well, that seems possible because you got the same distances you got here and you had 7 days. Seems possible that it will eventually hit there if Kroger has a good month, or it'll come down here or here. So I'm betting it's going to go up to there. So I like this trade. A calendar spread, 14 months out, costing me around $800, of which every month I can collect around $60, which is about 6% a month. And if you could do that every single day, you'll be a millionaire in no time. 5% a month is significant. That's a 60% per year return. That's Warren Buffett does 20 or 24 a year. This gives you a chance to do it, even if you miss a month or two. And if it ever gets to 47, close it out and take your profit. The nice thing about this is you can do this covered call diagonal month after month after month. The key is to find a stock you think are going up. And I think consumer defensive stocks will do better if we have some trouble with our economy, which currently we do. We have runaway inflation. We have a supply issue, which will be corrected, but our spending and our Fed buyback is going to cause a problem with our economy, and I think inflation is not going to correct so easily. Anyway, leave your comments about these two trades in the comments section below. I have my trade and trading view setups link provided. I have a free Discord chat with lots of ideas for the zigzag. And here is those buy and sell suggestions. And this is updated 3 or 4 times a day automatically. There's your RSI and your MACD. And I have a new at $4 a month. It's the price of a coffee. But I have a new Undervalued and Growing and some other strategies where I give the trades every day. And there's Kroger. And these are the new entry and exit singles and the scale in. Anthem is a scale in. And we're getting out of the trade for Merck. And these are all the trades you could probably look at to do this kind of thing. All companies that I think are undervalued and growing. And if you don't want to buy me a cup of coffee, from time to time, every week I'm going to produce these kind of videos because that's where I think the action's at, undervalued and growing stocks. Please like and subscribe. Make your comments below. Engage. Once you engage, your trading will get better. My trading has gotten better since I've started producing these videos and engaging and getting peer review. Like and subscribe. We'll catch you on the flip. And happy trading. This was a terrible day for some people, and I was short of several stocks, so I'm not feeling too much pain. Good luck. Get yourself ready this weekend for your trading day and a very actionable trading week for next week. Good luck.